What's going on, everybody? It is your boy Go to Trades, and I'm back with another weekly analysis of the S&P 500, NASDAQ, everything you need to know for the stock market ahead. We are ready. We're getting ready for the week ahead so that me, you, I are all profitable, right? We want to make sure that we stay profitable this week. I already know this year has been up, down, all around roller coaster, and I know it's been a lot, right? And, I don't want to brag, but this March has been a very good March for me. Very good, superb, right? And it's only because, okay, I'm gonna go on a little tangent, right? Some of you guys are new to the channel. If you are, hey, if you are, make sure like, comment, subscribe. If you're new, I don't do these tangents often, but it's coming. Listen, all right, you ready? Number one, all right. If you are trading, you should be getting something out of it. What do I mean by that? If you're trading, whether or not you're making money or not, right? If you're making money, then cool, you're getting something out of your trading. Even if you're not making money, you're taking L's, you should be getting something out of those L's, right? And what are those things you should be getting? You should be getting knowledge, you should be getting experience, and you should be getting lessons. If you're not getting those from your L's, your losers, then there's something wrong with the trading, right? I've been pretty open with my portfolio, and I've been telling guys, like, my January was good, my February was bad, now my March is really good. But one thing I've told you guys, I kept consistent, right, is that as time goes on in this market, because right now, before in 2024, 2023, we're in a bull market. Now we are kind of like in this stagnant market right now, this volatile market. I said that this market, I'm going to learn it and I'm going to master it. Okay, so it's okay if I take some of these L's as long as I make my money back, and not only that, as long as I learn how to be profitable. Okay, so that's my whole spill. We want to learn to be profitable, and that's why we are here, and that's why we're here to learn and try to be the best versions that we can be. Another thing before I actually get into this analysis, make sure to join the Discord. It's down below in the description. For the moment, it is free, but that's going to change. I'm going to put a paywall on the Discord. Why? It's not because it's super, gate kept or whatever. It's because people join because it's free and they're not active. I believe that if I make the Discord a paywall, it's going to incentivize people to talk, because if you pay for something, you're going to want to use it. Sometimes people just join. They're like, yeah, I'm going to use it. Yeah, of course, I'm going to use it. I want to make money. And then they don't ever use it. Okay. So I'm going to start doing that. So this is going to be your last time this week, or maybe, I don't know when I'm going to put a paywall. It's going to be maybe this week or this month. I don't know. I'm not going to lie. But listen, this is your only time, because I'm going to put a paywall. I'm just saying. Anyways, let's get started. Anyways, this is the S&P 500 index heat map, okay? As we can see from the heat map, and just a quick analysis, we can all see that it's pretty mixed. Obviously, we've seen like a major meltdown in the market, but it's not as reflective into the heat map as you would have thought. Like, I mean, you have pockets of red. Oh, red. You have these pockets of red here, but you still have these pockets of green. So you see rotation in the market. You see there are people rotating into these sectors. You have the consumer non-durables that people are rotating in. You also have communications, which people are also rotating in. You have energy, and it looked pretty decent. I mean, even finance, pretty mixed, but there are pockets of green. You see this here. Retail, there are pockets of green, So, I mean, are we really risk off? I can't really say. But I also can't say that we're risk on either. I think we're just pretty mixed. So all we can really do is just go off a price action of what's actually happening in front of us. So with that being said, let's continue. Okay, so boom. Before we actually get super in depth with the analysis, let's talk about what's to come. So this week we have some major economic U.S. reports and Fed speakers. On Monday, we do have PMI. I'm not sure how important that's going to be, if I'm being completely honest. April 1st. We have a few things. We have the PMI again. You have ISM manufacturing and job openings. Job opening is going to be super important. That's at 10 a.m. And we also have April 2nd. We have ADP employment and factory orders. Not sure if that's going to be pretty important or not. But one thing I will say, you have, I believe in April 1st or April 2nd, you do have tariffs that are going to be announced. So that's also something that's been driving fear in the market. So we're going to see how that affects the market. We also have on the 3rd, we have initial jobless claims, trade deficit, and what else? April 4th, Friday, we do have Jerome Powell speaking, Mike Barr. We also have Christopher Waller. Look, we have a lot of Fed speakers. Look at how much Fed speakers talking this week. We have 1, 2, 3, 4, 5, 6. We have 7. We have 7 Fed speakers. So Fed speakers are going to be speaking all week. That is crazy. I would say that. That is wild. Okay. Nothing much to say about that. This is going to be a wild week. A wild week, to say the least. Next, let's go over our progress. Okay, so our weekly progress for the week, we look decent. So last week we made about $700. It wasn't that bad. I don't think I went over the 2 weeks prior. So one of those weeks we made 2,000. Another week we made like $93. I mean, pretty good month so far. Our month, looking at 4 bands, 4 thou wow for the month. That's super good. And one thing I like about the stats, we have 85 trade win for the month. We also have a profit factor of 13 and a day trade win of 76%. Yes, sir. So we look good. We look good. This should be going up on Monday. I do have some trades going over the weekend, and we are gapping down. There's some puts, so hopefully we run it up. Okay. And obviously on April, we should be making our monthly analysis videos, which will go over my monthly performance and everything. So some of the trades I want to kind of highlight for the week, we had some Tesla puts. They did pretty well. Let me go ahead and pull it up so you guys can see. 1 hour. So yeah, I got in a little bit early here. So I got in a little bit early. This was a pretty good trade. I got in at 278. It ran up all the way to 290. Now, the reason why I didn't sell is because I was like, okay, well, we might peak above our relative high, which is right here at 290. And as long as we don't like break out of this like relative high, so if we don't break above like 293, 294, then I'm not really tripping. And I didn't really leverage too heavily. Like it was like a $300 play. I didn't leverage that heavily, so I wasn't really tripping about it. And we end up getting that win, and I took profit. I do have some runners over the weekend, so that might hit. I still am targeting this 250. I posted this inside of my Discord. Pretty good trade. I do think we're gonna hit this gap fill right here at 249. So I still like Tesla for the downside. What else? Another thing I kind of want to highlight. I got the Teslas. I thought I had Netflix on here. I think I took that on my other account, so I can't really take credit for it. Okay, then never mind. But solid week. Okay, so let's move on to the dollar and our U.S. bond analysis. Okay, so this is kind of weird right now. We're kind of still sitting in this range. It looks like we're bear flagging on the dollar. Looks like it. We might be bear flagging. However, I do think that even if we bear flag, as long as if we hit this upper trend line here, this is where I do believe sellers to actually come and initiate. So anywhere between, what is this? Anywhere between 104, 105, anywhere between 105 and 106, that's where I see sellers sitting. So at the moment, you're just still range bound on the dollar. That's my phone. And similar to US yields, like I said, you are just bear flagging at the moment. It looks like you're getting your first initial test of this upper trend line. You might get another retest this week, and you might ultimately break down here. So that's what I'm kind of watching for. Not too much action. I mean, you do look like you're putting in a head and shoulders right here. So you could be breaking down. If you do break down, you could break down towards 37%, 4%. We'll see, because that can actually help the market a lot. But obviously, only time can really tell. Because, I mean, even if you do make this a base and break out, then yeah, this would look kind of crazy for equities and stocks. So yeah, anything could kind of happen here. All right, so to transition into the futures, the future market already opened up and it's already gapping down. So we kind of already, we can kind of see how everything's already starting for the Monday. People actually think it's going to be a Black Monday tomorrow. And I mean, you're already starting it, so maybe it might just be. But for the weekly analysis for the NASDAQ, as you can see, we are entering a buy zone. This is going to be like a buy zone area. I guess the main point that you have to know for this week is that as long as we're underneath 19.4, I mean, there's no point of being bullish, right? I mean, yeah, you're in a buy zone, but you can leverage in, like, I guess, small position size, because this is a buy zone. The last time I made a video, I talked about this being a buy zone. As we approach it, we might start seeing buyers, and guess what? Lord behold, we saw buyers. We saw wick actions on that March 10th week. So I mean, now that we're actually closing under, like, actually inside of this zone, I do think buyers are going to try to show their hand here because they already did once. Now, obviously, if they fail holding your low, which they kind of already did, you have multiple zones here that I would be looking at, especially in contention with demand. So you have 19.1. I got 19.118. And your weekly expected move will be between 19.118 and what is this? This is 18.731. So anywhere between 18.731 and 19.118, that's where I'll be looking at buyers to try to step in on the NASDAQ. And honestly, I'm not going to lie, as long as, because in our monthly analysis, right? Our monthly analysis, we said that if we're below 20,121 and we have a confirmed hold of 19.8, we're bearish. Like, we are in a danger zone. Like, that is our danger zone. So look, we're below that 19.8. So look, 19.8 was actually what, like up here, and we're last week we crushed that zone. So I mean, right now, if you want to look at it as maybe a potential buy, we can. I mean, even if we look over to the left side, we do have where buyers stepped in heavily, which was in that August capitulation time. This was a good buy. So I mean, if buyers hold you up here as like a contention point at this 19.118, then hey, that might just be the bottom. Hey, who knows? Maybe. But that's where I'd be watching. All right, so to transition over to the ES and the S&P 500 futures, I mean, it's pretty much the same thing, right? So as long as you're underneath here, well, actually, I just want to point this out. Let me point this out, right? So you have this major uptrend, multi-year uptrend, multi-year. So I mean, let me go ahead and take this out, right? So you've been resistance, right? Resistance, support, resistance, support. You know what I'm saying? Hold up, I actually just messed up. Okay, resistance, support, resistance. Now we were supposed to make support here, right? But we end up breaking down. So this is a multi-year. This has been a trend since 2023, and we're actually breaking underneath this trend, right? So we're actually breaking underneath the trend. And what's interesting about this trend break, right? We broke out of the trend, and as soon as we broke out, we tried to retest last week and we failed, right? So a test of 5,800, we end up trying to test this and we failed. We failed the 5,800 tests, and we didn't get any price acceptances above, and we end up falling. So now we are retesting lows, which sits at, what is this, 5560. And I mean, you already reached new lows on the NQ. We did, right? Yeah, you already reached new lows on the NASDAQ, but we haven't done it on the S&P, which is pretty interesting, right? So I do think that if we actually reach new lows, kind of what the NQ is signaling, I mean, you have room, right? So you have so much room. And the zone that I see buyers stepping in is this area right here. Let me take out this area, right? So you have between, let me take out my lines, boom. So anywhere between this area, between 5,500 and 5,515, I do believe buyers sit. So this would be my buy zone. Now, obviously, if we go under 5,500, we end up going like underneath. then obviously like you do have even more room for buyers to possibly step in between 54.50, and underneath that you do have this fib zone that I'm watching, which is 54.17, and that's where I also think buyers can possibly be sitting. Now, if all else fails, you do have the 5200, and that's like your last line. That's like your last line of defense, because if you really think about it, your highs in 2021 sits around this area, right? So even if we end up like not even touching this zone, but touching that fib zone, like I do think you'll find buyers. So we'll see. I mean, I'm not counting out the upside. Plus, if you really look at it, if you like really zoom in, you have a head and shoulders playing out on a weekly chart. So you have your left shoulder right here. You have your head right here. So you're still trying to fill out a right shoulder. So any type of test down here, we find buyers, we try to rally, and we get some type of look below and fail. I mean, hey, you could be setting up for even a more nastier breakdown in the broader market. So I mean, there's so much different ways to play this, and the reason why I'm saying this is like, I mean, we can make money on both sides. We don't have to make money off of just purely looking at the downside risk, right? Like, I honestly think this week we might even just end up green this week, because at the end of the day, like, if there's buyers down here, which I do think that there may be, if there are buyers, then I do think they're gonna, set you up to at least fake you out, like for another leg lower, if there is another leg lower. But if we do get price acceptance towards the upside, breaking above, then cool, like I'll take that. But we can't really know for sure, and nobody really knows for sure. There's so much uncertainty in a market. But I do think that this is going to be your initial buy zone, and if buyers, bring you up, they bring you up. If not, sellers is going to knock you down. So that's what I'm watching for the ES and the NASDAQ. Now for the Russell, I do think the Russell is a similar story. I mean, you're kind of trending lower. You're doing like this trending lower zone here. Do I think you find buyers? Maybe. I mean, you found buyers, you sold down, but you haven't even really made a new low on RTY as of yet. Now we might make a new low. I'm not too sure, but I still think that there's room toward the upside to at least test 21.6, because I mean, if you test 21.6, which is like your range bound, upper bound resistance, then I do think that, look, we could retest it and then fail again, So that's something I'll be watching. But for the most part, I do see that there's even a smaller head and shoulders here. So this can be one head, this can be another shoulder, and we could actually be setting up to set up another shoulder on the right side, which is on this side right here. Let me take out the shoulder. So right here. So even if we get some type of bounce, if this actually acts as demand, we get some type of bounce here, consolidate for a while, and then break down, then I wouldn't count that out. Like, there's so much different possibilities, especially for the Russell. So, I mean, anything can pretty much happen here. Now, when we go to the Dow Jones, it's pretty much a similar story. But I'm not going to lie, a lot of people are, like, super duper bearish, and like, as they should be. I'm pretty bearish. But the Dow Jones haven't really shown me anything, like, too crazy, in my opinion, right? I think that the NASDAQ and the S&P looks worse. I actually still like the Dow Jones. Let me go ahead and erase this because this is kind of pointless at this point. Because for me, when I really zoom out on the Dow Jones, it just looks like it's forming some type of bull flag consolidation towards the upside. Now, it kind of looks like this, right? We're just setting some type of bear flag. So even if we find more sellers to double bottom you here at this 41,000 level, it looks like we could potentially do something like this, right? Where we retest this upper bound trend line and then we break back out towards the upside. I'm not really too bearish on the Dow Jones, and honestly, yeah, we broke this trend line right here, but I mean, this wasn't this trend line reaching from October 2023 to to December 2024. I mean, this hasn't given you as much dips as you really would like. I mean, for the most part, you just been getting like straight upside. Yeah, even though you got an upside and you found a resistance, instead of like you pulling back, which is like a shallow pullback, you just been like trending and then you break out. You know what I'm saying? Even when you got the upside here, you start trending. Like you just trend right here, you got upside, you start trending, and now we wanted to break out, but we didn't. So now we're getting that downside pressure. But the downside pressure, I mean, is this really downside pressure? Because all you're really doing is just testing your previous resistance. Because right here was your previous resistance, and then you end up breaking out, right? So you end up breaking out of your previous resistance, and now it's trying to act as support. So this area is acting as support. So if you hold this area, I mean, you could just be forming some type of bull flag, and a bull flag consolidation usually ends up, paying people out. So as long as the Dow Jones stay above this zone right here, so between 41,550 and 4,100, I mean, I think you're still bullish, especially on the longer term trend. You're still bullish, but obviously in the shorter term, this doesn't look good. So, what do I think? I think that we are setting up for some like shorter term momentum towards the downside. Cool, yeah. But this is just going to prepare you for more upside in the future. As long as you are making higher lows and higher highs on the monthly chart, I honestly wouldn't be too scared. I mean, here on the monthly, look at this. I mean, this doesn't look bad on the monthly chart. Now, when you look at it from like the S&P and the Nasdaq, it's starting. I'm not going to say it is, but it's starting to look bad. Right? It's starting to look bad. But if this is the bottom, I don't think it looks that bad. We're gonna have to see more continuation and more momentum towards the downside to actually confirm that this is a bear market, and it's gonna be a start to a bear market. But for now, we don't really know. Now, when we go over to the tech looks kind of like the Nasdaq. Obviously, it kind of makes sense, right? You're breaking out of this multi-year channel here. This is your multi-year channel, your big tech chart. You're breaking out or breaking down. You actually broke down, and you have this nasty, look at this weekly candle. This shit looks nasty. So you broke down, and you kind of encapsulated your two closes from your previous 2 weeks. And I mean, you didn't make new lows, which is pretty good. But if you do make new lows, that would be really bad for stocks. Now, as long as you stay above, what is this? This is 2690. As long as you stay above 2690, you'll be straight. But if you break down below, then I'd have to start really flipping bear, right? Mind you, I mean, at the moment, I have no choice but to be bearish, and that's where we've been making a lot of our money in March. But I mean, the longer term trend is up, and we have to give that the benefit of the doubt, at least right now, right? So until you break down your last final key level, which is underneath 2690, I don't know, So we're going to have to see how this week plays out, especially how this monthly chart plays out, because look at the monthly for now. Like, this looks bad. Right now, you're starting to look like you're breaking down. You haven't fully broken down because the month hasn't ended, and you're almost there, kind of looking like you're going to break down, but you're still kind of in a channel on the monthly chart. Because, I mean, if you end up the monthly, look at this August, right? The August, you got a failed breakdown here. So there's still potential that tomorrow we might just get a failed breakdown. Who knows? We don't know. So we have to see. Now let's go to the XOK. XOK looks pretty similar, but worse. Actually, no, it doesn't look similar. This looks bad. XOK looks terrible. Honestly, the XOK, this was my favorite chart ever, because you've been consolidating since July, and I thought this could end up being like accumulation toward the upside, and you start back up the bull rally again, but you end up breaking down. Now, one of the biggest things that kind of was the nail in the coffin for me, at least, was the breakdown below 223. Once you broke down below 223, because this is like, this zone right here is my bull bear thesis, right? Once you broke below that, that's when the trades were on, right? That's when you can get into the Apple puts. That's when you got into the Nvidia puts. That's when you got into the Microsoft puts, because this was bad, right? Now, right now you're testing your lows from September of 24 and August of 24. You're testing these lows. So if you end up breaking underneath 203, 204, that's when like things get hectic, right? So right now you're trying to hold this area. This was like your previous highs in March of last year, and you're trying to mount that. If you can't mount that, then it's gonna look hectic. You also have another soft demand zone here between 90 or 190, like 190 and 192. That's like your soft demand zone here. And underneath that, you still have major demand here between 177 and 180. This was your multi-year demand zone. Well, multi-year supply resistance zone. Every time you got here, you got a major sell-off or at least consolidation. So a retest of this area would actually instigate buyers to actually position themselves for the longer term. That's where I would buy. So, I mean, if we end up trending lower and lower, this is where I would be a major buyer. But I wouldn't count out the fact that down here at 190, we might find something. So even if you look at it, we are still setting up some type of longer term head and shoulders, because you have your left shoulder, your head, and potentially your right shoulder, right? So even if we come down and we find buyers to buy you back up, I do think that around here can be your area for, another ride lower. That can definitely happen. So that's what I'm watching for the XOK. Now, when we look at the QQQ, the QQQ is basically the NASDAQ, and I mean, it doesn't look good. Like I said, you could possibly be trending lower here. You're at this point, you're going to be opening the market underneath these lows here. So underneath 465. At this stage, what am I watching? I'm watching for a test of 450. Anywhere between 450 and 445, that's where I'm a buyer. Because at that zone, that's when, again, this is when you had your resistances, right? So this is your resistances, and it end up flipping to being support, right? So you end up breaking out of this, came back, found support, found buyers here, and it held you up ever since. So any zone in between this control bar here, so anywhere between 450 and 425, ideally I'm a buyer. And at least for the shorter term, because even if you're a buyer and you expect that there's going to be some type of dead cat bounce here, you come back down, you retest, and you potentially find some type of supply zone here, and it sells you back down, because guess what? This looks like a head and shoulders for me. So that's what I'm watching for. So long story short, everything looks like you're gonna sell hard, find buyers to bring you right back up, and sell even harder, at least for now. So that's what I'm watching for in the tech space. Now, this is what I kind of was excited to actually do an analysis on, right? This is the thing that makes my mouth water. I'm not gonna lie, right? The chip market, the semiconductor market looks like the best opportunity this is like the best opportunity ever. I'm not gonna lie to you. Mainly because we've, for the past 5 years, I've never seen a sector rally like this. Now, you look at these ETFs and they're like, okay, that might be an exaggeration on because obviously this is an ETF, right? But within these ETFs, when you look at stocks as like Nvidia and AVGO, oh my God. When you look at those stocks rallied crazy. Even AMD before it became trash. These stocks were going stupid. Now, as I'm looking at these ETFs, this looks like distribution all across the board. This looks horrible. This looks like a multi-month breakdown. And multi-month breakdowns usually end up in tears. Now, what's more interesting is that your right shoulder on most of your charts are forming, right? But The semiconductor charts look like they have already formed. It's the ugliest thing I've ever seen in my life, but this is a Head and Shoulders, right? Not every Head and Shoulders is pretty, but this is a Head and Shoulders. And this looks horrible. If you actually break down your neckline here on SMH, if you actually break this down, oh my God. Like, you have room. If this neckline break underneath 200, you have room all the way to 160. Do you know how crazy that would be for like stocks like Nvidia and AVGO? Seeing those prices again would be major buying opportunities. Going short on those names would yield so much profit. It's crazy. So I'm super bearish on semiconductors. Semiconductors look like it's going straight to the pits of hell. I'm not gonna lie to you. And even if you look at XSD, look at XSD right here. Same thing. This has been a clear uptrend for multi years, 5 years, 5 years straight up. Now you're finally seeing signs of weakness. If you continue seeing signs of weakness, I mean, if you could hold underneath 208, you look crazy. This looks like it could break down heavily. Same thing with the socks. Like, let's go to the socks right here. The socks look even worse because the socks actually broke its neckline. The socks is actually setting up to break down. It's already in motion. It's already in motion. It's almost done. Trying to retest its cup and handle that it formed all the way in 2021. Like, this looks crazy. Looks like you have room all the way down to 180, 178. Well, that's really all I have for you guys for this week. Make sure you guys leave a like, comment, subscribe if you're new. This is your boy Go to Trades. And with that being said, I'm signing off. Again, my Discord link is down below in the description. If you have any questions or you just want to connect, make sure to leave a comment. Also, I don't have any sectors I'm really particularly watching for the week. I'm just really watching and waiting. And I don't really have any individual names that I want to promote, or at least that I'm watching for the week ahead. Because everything I'm already pretty much in, and I'm just chilling in those positions. However, obviously those things will change in the intraday or intra-week. So if you guys want to see what I'm trading, see what I'm doing, then yeah, you guys have all that down below in the description with my Discord link. Anyways, with that being said, I'm gone. Stay green this week.